What can you do last minute that might save you money?
Well, let's talk about how you can save money on your taxes and boost your savings at the same time.
Okay.
One of the great ways to do it is to make sure that you contribute to an IRA, to an individual retirement account, a traditional IRA, so that you can get a tax deduction. If you don't participate in a workplace plan, you don't participate in a 401k, you can put $5,500 into an IRA or $6,500 if you're 50 or older and take a tax deduction. If you do participate in a 401k and your income is below $63,000 if you're single or $101,000 if you're a married couple, you could also take a full tax deduction on this IRA. The great news is that you have till April 15th to do it and still have it count for the 2018 tax year. You can also put money to save for health care expenses in an HSA, a health savings account. And so if you have a high deductible health plan that you contribute to, that you're covered by already, you can contribute to this HSA and also save $3,400 or more, $6,900 if you're a family, put that money into there and get a tax deduction on those contributions.
If you already put the money into your HSA, say last year when maybe you had an open benefits enrollment,
right,
can you add more in now? Or
you can add more until April 15th.
The job market is so tight. There is such a demand for workers. A lot of people have gone out and found a side hustle, another job. Is there any way that you can manage that to your advantage for taxes?
You absolutely can, and you absolutely should. You are an independent contractor. If you drive Uber on the weekends, if you rent out your home to Airbnb, you're an independent contractor. And so think about things that you used, expenses that you incurred that you could possibly write off. Business meals, office supplies, any type of equipment that you had to buy, a laptop if you're a freelance writer or something. All of those things are things that you could possibly deduct. You have to fill out another tax form called a Schedule C. A little bit more paperwork perhaps, but definitely worth it to get those deductions.
What about parents? Are there any overlooked tax breaks that they get?
Well, I think parents are often, they forget that child care expenses can also be summer day camps, which can be very pricey, daycare, babysitting, all of that could fall under the child care tax credit. And the great thing about making sure that you can save 35% of qualified expenses and a significant amount, $3,000 for one child, up to $6,000 for two children, this is a tax credit. That means a dollar for dollar savings on your tax bill. So that's something significant. When you're looking at what kind of tax break should I look for, a deduction, a credit, credit always better, dollar for dollar.